Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFT Perp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. Welcome to episode 3. This week's episode was an absolute banger. We hopped on a Twitter live space with the entire team over at Insrt Finance. Insrt Finance is an asset management protocol for NFT-driven strategies that allow users to generate yield from their signature vaults. We caught up with their entire team to see what they're currently building and then to get their thoughts on what's to come. Let's jump straight into it. Thanks again for tuning in. Welcome to the third episode of Look at My JPEG. And today we got a couple of team members from Insrt Finance with us. I believe there's Hentai, there is Loris, and also Punter, which I think his name is Daniel, if I'm not wrong. Welcome to the pod, and why don't we can give you a quick intro of yourselves, each team member, and we can dive right into the podcast today.
Sure. Thank you for having us today. Briefly about myself before I hand off the mic to everybody else. So my name's LZ Minsky. Previously, I was a researcher at the London School of Economics on securitization, structured finance. Went down a little bit of a different route compared to all my other course mates after grad school, and somehow ended up in the on-chain finance DLT space. So yeah, that's a short intro about me. Maybe Hentai can go next.
Yeah, what's up, guys? I'm just seeing some of my friends here in the chat. But name's Hentai Avenger. You can call me Steven. I spread misinformation here on Twitter for a living nowadays. Been a derivatives trader here in the space for about 4 years now. I'm just spending some time just like traveling around the world at the moment.
Hey guys, it's Punter, also known as Daniel. It's my federal name. Software engineer by formal profession. Worked in consulting, fintech, and hedge fund contexts. About a year ago, I started working under my own smart contracts consulting firm, and now I'm the head of product over at Insrt.
Awesome. Yeah, thanks for the brief intro, everyone, and welcome to Look at My JPEG as a podcast. Maybe we can dive right into it. Give us a quick 3 to 4 sentence explanation, like explain it like I'm 5 sort of explanation of what is Insrt Finance.
Sure. So to put it simply, it's an asset management protocol, right? What we want to do, like the problem that we want to solve, is to expand the addressable market for NFT finance, right? So we have a lot of amazing infrastructure, a lot of amazing primitives out there. We want to make it tremendously easy for people to just, deposit their JPEG and get basically access to structured, passive strategy so that they can get returns over time, and to make it as simple as possible so that, so that anybody can get a piece of the NFT financialization pie, more or less.
Makes sense. When it comes, for those that don't understand addressable markets, talk to us about how big it could be, what is that right now, and the specific ways that you guys are looking to close that gap.
Sure. So it really is relatively hard to pinpoint the specific market for NFT finance at this point in time, right? You can look at things like, it really depends on, the angle that you're looking for. You can look at, for example, the amount of loan volume that is currently being originated on NFT lending protocols, and there's a lot of them out there, and they can segment them based on peer-to-peer or peer-to-protocol or peer-to-pool, and there's a lot of different ways you can go about it. But what we actually like in terms of the attack vectors that we're looking to go for in terms of, expanding the addressable market is basically doing two things, right? The first thing is that we want to provide an access and simplicity layer for the entire space. So what we do is we partner up with primitives and we build structured products on top of them so that a user can just go on our DApp, they press one button, they deposit a supported asset, and that's just it. And what basically happens, what we want to do with that is, allow people to have a much more seamless experience when accessing NFT financialization protocols. For example, right now, if you want to access a primitive, You have to go through the docs. You want to understand where the yield comes from, et cetera, et cetera, et cetera. Basically, do the kind of due diligence that any sensible degen would basically do upfront before putting their money into something. And what we want to do more or less is just streamline that process, provide a great user experience, and allow our users to play around with strategies that normally are, I would have to say, would be only accessible to whales and power users, right? So forms of diversified exposure, rebalancing or optimization, and we just want to make it accessible for the every man and every woman.
Yeah, makes a lot of sense. I went through your website. Looks like you guys have several different vaults you guys are working on, and the strategy vault will be one of the first ones you guys push out. Talk to us a little bit about the primitives that's underneath, if you can name me any sort of protocols, and what makes it difficult for someone to access it, and how do you guys plan on making it easy for users to enter these positions?
Sure. I'm going to hand off the mic here to Daniel to explain a little bit more. But as a brief intro, we're focusing on like two primary product categories right now. One of them is the fractional vault, which focuses on fractionalized exposures, and then the yield-driven vault, which is basically levering up against NFTs and using those borrowed assets to farm yield in a lot of different ways. And there's like tons of permutations that you can potentially create. But Daniel, maybe you can hop into the fractional vault. I'm sure that we can mention our primitive partners here.
Yeah, absolutely. Be happy to provide some more detail there. So, I mean, in terms of the overall space, there's something like 400, 500,000 monthly NFT degens currently. And within the NFT finance infrastructure landscape, there's maybe like 10 to 20,000 users at most. One of the platforms in particular that we've been looking at that has attracted pretty decent adoption and volume in terms of financial NFT infrastructure is NFTX. So they provide a fractionalization platform and trading platform that wraps NFTs into ERC20s and provides their own vaults. So our fractional vault is a middle layer or wrapper on top of NFTX, which allows users to gain diversified exposure across all their vaults and capture LP fees that are automatically managed and compounded by us for them.
Got it. That makes sense. So, as a user, typically, if I were to use NFTX, I would imagine, all right, I've got, because originally they went through a couple of different facelifts and different strategies that have been deployed, like FloorDAO is another interesting protocol that spun out of it. So, originally, as an NFT user, if I want access to instant liquidity because there's not enough bids on OpenSea, for example, I can go ahead and lock an NFT, mint the ERC20 version token of it, and essentially swap it from an NFTX sushi swap pool and get instant liquidity relatively fast. But then once that's being created, you have a lot of potentials around yield opportunities to be built on top of it. For you guys, are you saying in a way that you're allowing more users to pull money together, perhaps purchase NFTs, and therefore have access to different LP positions? What does that look like in detail?
Yeah, so I mean,
Sure.
we're really bullish
Yeah.
on decentralized liquidity in general. I think the market trend is clearly pointing to users more and more moving away from permissioned marketplaces. And I mean, in general, NFT users, as it stands, kind of have like a visceral gut reaction that they're kind of scared or turned off by any aspects of native DeFi protocols. We think that they're going to be more and more important as we go along. I mean, we're seeing clear successes across the board with pseudo swaps AMM model coming and taking over the marketplace by storm, capturing a pretty significant chunk of OpenSea's daily trading volume already in such an early stage. And so, yeah, we want to just sort of empower the typical NFT user that might not be as well informed by typical DeFi mechanics, but still wants to gain access and exposure to the returns that are generated within the space.
Got it. What other yield opportunities do we have with the primitives you guys are working with?
So the other main vector that we're looking at is collateralization, right? Currently, as it stands, if you want to lever up against your NFTs, there is actually not just a cost in terms of time, but also in terms of cognition, right? So if you borrow against your NFTs, you get some kind of asset back. And you have to think about things like risk management, monitoring, right? You obviously have that liquidation risk. You have to think about how you're going to pay back the borrow rate. You have to think about whether, you can get where the spread is sufficient, taking into consideration the LTV and the borrow rate, right? So that creates a pretty, I wouldn't call it tremendous, but a significant cognitive burden for a user who wants to lever up against their JPEGs and simply farm yield. And yeah, as Daniel previously mentioned, that we act as in a lot of ways as a middleware. What we basically do is automate that entire process for the users who want to deposit a JPEG. And additionally, on top of that, we're looking in terms of our mechanism design on how we can include non-JPEG depositors to participate in our vaults as well without free writing on top of the JPEG depositors, right? So all these aspects coming together, it really just comes down to like creating accessible NFT alpha, like really building a simplification layer and trying to reduce those temporal and cognitive costs for users as much as possible.
Yeah, I find that very, very interesting because the underlying strategies are quite different and the protocols underlying are quite different as well. And for those, if you're a builder that are listening, you will understand every protocols have different ways of pricing NFTs. They use different Oracle model, and the way that the language that they use in the contract specifically are also quite different. So sometimes building a middleware protocol that interacts with several different underlying dApps is quite difficult. Composability becomes a very large, important thing as a protocol you need to figure out. Talk to us a little bit about being a borrower. You mentioned early on it's a cognitive load and it probably just really a task on you're really trying to figure out what sort of interest rate am I really paying when I enter a loan position. If it's a loan in perpetuity, like BendDAO, other platforms, you get it. Obviously, you have like a liquidation prices. You could perhaps have a grace period. You can buy back your NFT, which is great. But when it comes to NFT-5, for example, which is another whole different protocol using a PDP model, you don't have a liquidation. You have a fixed duration for your loan. You have to pay back. So it's very fragmented, is what I'm trying to say. And as a borrower, these things become more and more challenging if you don't have an aggregation protocol to handle the metrics for you. As a lender, are you guys specifically looking for ways for lenders to gain more yield or deploy, easier with good strategies?
I think, I think it's like the first point that you mentioned, the fact that the space is extremely fragmented, that plays a part in the cognitive load that the user experiences, or that a borrower would experience when they're trying to find the right primitive for them. And there's obviously a lot of different microstructures that you can play around with. There's peer to peer, there's peer to pool, there's peer protocol, right? All of them provide different rates, so that plays a part in terms of no, I wouldn't call it like product friction, but I would say like friction in terms of the user's journey and trying to find like the best fit for them. When it comes to lending specifically, what we're looking for to do in terms of mechanism design, and just to clarify, like the fractional vault we're planning to deploy in our mainnet in approximately 2 months. The yield gen vault is currently still undergoing mechanism design, and we're just talking, the primitive partners that we want to work with, and we're collaborating with them to like design the right kind of mechanism that would, truly, let's say, provide that kind of curve shift that we're looking for. But yeah, to specify specifically what we're trying to accomplish, and I don't want to go into too many details right now at this point in time, we're trying to identify a way how we can create additional backstops and let's say the lending process or the microstructure that would allow us to provide users with even better, more favorable borrow rates or even higher LTV on top of the rates that are initially provided by the lending protocol. But Daniel, maybe you want to pop into this as well. Maybe you have something to say.
Yeah, no, I think you guys sort of touched on the most important things to deliver to a borrower in terms of an optimized experience, which is that you want to offer them the best rate, high LTV. You want to manage their liquidation risk for them. You want to manage the terms of the loan for them. And a lot of times, the things that are going to help a borrower get favorable rates is actually similarly to what the lending platforms, pools, or protocols are looking for as well. So we sort of hope to be or aim to be an aggregator in that regard that is able to provide users with the best possible rates where the hunting and deal shopping is abstracted away from them.
Makes sense. I think currently the rates are relatively high, depending on what sort of underlying primitive protocol is operating with. Usually with a pool model, the interest rate could be higher. If you're talking about PDP model, interest rate could be lower. But I think on a very micro level, competition has played out in NFT-Fi. So as a borrower, you get offers on your specific NFTs, and in some ways the lenders are competing against one another, saying, "I'll give you a better interest rate," and the other person goes, "I'm going to give you another lower interest rates," and it's eventually you accept on one. And I think on a macro level, because of these lending and borrowing protocols that are slowly coming out with different mechanisms, but ultimately as a borrower, what you really care about is what type of interest rate and risk you're looking at. And I believe over time, because the supply getting higher and higher and the protocols becoming more and more mature, the interest rate will get more competitive because of that. And I think as a protocol, like NFT perp, we're working on NFT as collateral as well, and we don't want to take on initially as a protocol to be lending out ETH supply for taking NFT as collateral. We'd rather be working with other lending and borrowing protocols out there that have sufficient liquidity and infrastructure for us to tap into. And the natural question becomes, who do I work with? And if I can find a middle layer like you guys that potentially working on NFT aggregation for lending and borrowing from a borrower standpoint, that will be amazing as a tool to use for protocols like that. So I already can see on a BDC level what you guys are focusing on, but on a B2B level, we can be one of the power users too.
Yeah, I think one of the obviously, yeah, we have to look at two related, but at the same time separated value propositions, right, or potentials for product market fit. So we do have to think about the primitive side and the B2C or the retail user side at the same time. What we're trying to help out or add value in for the primitives that we want to work with is actually very, very simple, and that is more liquidity. By making things as simple as possible, we increase the probability that users who, at this stage in time, given the fragmentation and complexity of the primitives that currently exist in the market, not by complexity, I don't necessarily mean, for example, complexity in the UX. I think most of the primitives out there, most of the infrastructure, it's very built, relatively well accessible as adapt. But taking on risk for a lot of retail users and less sophisticated users who aren't really like degens or who don't hang out on crypto Twitter that much, those things might just seem, let's say, scary to them, right? They have to cross, a certain emotional threshold or a barrier to actually take some kind of action on a primitive, right? They don't want to lose their JPEG, especially if they really are like a casual JPEG holder who simply wants to, or effectively make their JPEG yield bearing for a little bit. And that's what we want to unlock here, just giving those types of people the ability to make their JPEGs yield bearing, which provides the primitives that we will partner up with the broader user base, right? People who at this point in time simply are not that interested or in NFT finance or simply don't find it appealing right now due to fragmentation and complexity. Like when it comes down to the benefits that we provide, that really it just comes down to that.
No, that makes sense. Besides NFTX, these fractionalization protocol and some of the lending and borrowing protocols we might have mentioned, what other primitives you guys are working with that are not in this category, if any?
We do have an ongoing conversation with a primitive that we're very interested in working with, and that has been recently generating a lot of traction. And there might be a lot of very interesting ways on how to effectively provide scale to how LPing works on that particular protocol. But unfortunately, we can't disclose that at this point in time. But yeah, we're super excited about the partnership, and we're gonna have some more clarity on that next week. And we hope to get a product out on their primitive, on their protocol, let's say 3 or 4 months. But yeah, there's I think the our decision space, one of the most important factors in our decision space is just really finding like the kind of the teams that we vibe with, the teams that we believe have a very long-term view in terms of their technology and how they want to progress their product. And obviously there is a lot of ambiguity, right? There's a new NFT finance primitive coming out on a bi-weekly basis right now. And one of our jobs right now is just meeting a lot of teams, having conversations with them, and seeing whether there's synergy, not just like in terms of technology, not just in terms of like the financial value proposition, but whether they're like the types of people that we want to work together with for the next 6 months, 12 months, or 8 months, or 24 months, right? We just want to find people that we vibe with. WIBE is extremely important.
Yeah, I think as a protocol that essentially, from what I'm hearing so far, is you guys want to make strategies a little easier for users and retail out there, and makes a lot of sense in terms of vibing with the correct protocols that have long-term visions. Sometimes this space is so new right now. I think as we're building, a lot more opportunities are discovered as we test things and test out more, protocols. As we test out more protocols, usually there's gaps either in ways you can profit and ways you can generate yield, and the ways you can because of generating yield, you're taking on certain risk, therefore you can offset some risk you can work on with other protocols. So I think, yeah, just being able to stay connected, and that's part of what we're doing here at Look at My JPEG, by building a little bit more awareness around NFT finance space. By connecting with you guys, we hope to explore certain synergies down the line on a product level or on a protocol level. So that's super interesting. Um, I guess like I'd love to take a step back and look at ask you guys for Insert Finance, NFTs right now. I think the most valuable NFTs we've seen so far that's been widely adopted around PFPs. Perhaps financial NFTs is the next thing. What do you guys see? Long-term vision is for Insert Finance that's around NFTs, and yeah, just kind of curious on that end.
Sure, Steven. Daniel, you want to tackle this? Maybe Steven can talk about his favorite JPEGs.
As someone who completely missed the entire JPEG pump in 2021, it's sometimes hard for me to talk about my favorite JPEGs at the moment. But yeah, I think personally, I find that a lot of the OG, like the super OG Ethereum JPEGs, are my favorite. Like, I've always been a super big fan of punks, and unfortunately, back in 2021, when I did have some exposure to NFTs, the majority of my money was in Ethereum Mooncats rather than punks at the wrong time. So I definitely did shaft myself pretty hard there. But yeah, Punter, do you kind of want to talk about where you see Insert in like 6 to 12 months now with I guess like our stance with JPEGs?
Yeah, absolutely. So, I mean, I think in general, it's quite clear that a lot of the existing financial infrastructure for NFTs is being built around blue chip projects. Obviously, it makes sense as you need sort of that initial liquidity and user base built in. I am really excited about sort of the landscape expanding to include more and more collections, and also in general, I think it's pretty clear to everyone probably in this call that JPEGs are more of like a Trojan horse for what NFTs really could be. You mentioned financial NFTs, bridging actually like collateral positions, but eventually down the line, I think everyone is extremely excited about the opportunity of real world assets being represented by NFTs. That could be a bunch of different forms. In general, we're very bullish on NFTs, much more beyond just JPEGs. There's also the whole GameFi space that's blowing up and is not going to be stopping anytime soon. And yeah, we hope to be able to serve every segment of the NFT market beyond just profile photo collections as well.
Yeah, even like 3 years ago, I was like doing initial research on how potentially, um, well, some protocols have already dived into this, right? Effectively, trying to bridge, I would call them DeFi credit markets with real world assets or real world lenders, originators, or companies, right? So to some extent, Goldfinch Finance provides a good example of that. But even like 3 years ago, I was thinking about potentially like bringing like the securitization stack on chain, and there's ways how you can go about that. But what I think like uh, in the long term, honestly, to put it quite bluntly, I think as we develop like the foundational infrastructure around PFPs, and as the infrastructural landscape expands beyond like this initial vertical and goes into other verticals and develops more sophisticated technology around that, I think NFTs will play a significant role in what I believe in a few years down the line will be like the creme de la creme for expanding, or like the crux or the inflection point for expanding like the addressable market for, I would have to say, DeFi in general, and that is finding more efficient, safe bridges between digital assets and real world assets, and NFTs representing those asset classes seems like a great way to conceptualize how some of the foundational problems in that problem space could be resolved. And yeah, our team, we've had a lot of discussions on this. We don't have a clear picture on how we'll be able to capitalize on that opportunity, but we would like to be there when that happens and, build our technology in a way that we can stay on the bleeding edge so that we can be a part of that later down the line after JPEGs.
No, 100%. I think that's part of the reason why we're all very excited to build in this space, because I think it applies the idea of NFTs applies to so many other things that we're just currently not unconsciously not aware of, And I think because of that, building toolings around NFT finance and keeping it agnostic is one of the most important thing that, as an early adopter, you should do for a protocol. So I think whatever that looks like in the future, as long as there are ways to generate yields, and as long as you guys can focus on how to simplify it for users and making it more accessible, we're pretty bullish on Insert Finance. Talk to us a little bit about, I love to come back and talk about product a little bit more. Went through some of the docs. You guys have mentioned something along the line of, infrastructure index for NFTs. How does that work? If you guys can share a little bit more, how does that benefit a user? And how does, I think one of the questions I have would be around, for using Insert Finance. I typically like to think about, the different stakeholders in an ecosystem. Do one always will be using, sort of investing into an index sort of model, or is there's a liquidity provision model? How does that work?
Yeah, I'm gonna have to disappoint you there. We actually in our initial R&D efforts, we looked at. So we've been thinking about what kind of products do we want to build. We've been building out the mechanism design for, I would have to say, the past 6 or 7 months now, as well as obviously building out the contracts architecture for that. And the initial idea for the NFT Infra Index was twofold, right? The first value proposition was that we wanted to um, effectively employ a relatively simplistic product that would allow retail users to have diversified exposure to a lot of the amazing NFT-fi projects out there. And the second value prop will be that we would make it composable with our other products, trying to figure out a way how users would, in some kind of synthetic way, possibly hold two positions in two vaults at the same time or two products at the same time. However, relatively recently, our team decided that we wanted to streamline our product strategy a little bit, and that's why at this point in time we're focusing on just the fractional vault and the yield gen vault. But from a mechanism design and a contracts architecture perspective, how those vaults effectively function is that, to put it, in a very simple way, you just have a vault pool, and every single user who deposits a supported asset into the vault has a pro rata exposure to that vault, or effectively a claim on the assets that they have deposited and the proportional surplus that the vault strategy will generate. And that pretty much is like the center point for, how assets are originated by the vault and how users will be able to redeem their returns over time.
It sounds a little bit like, I'm trying to put together in forms that I understand. It sounds a little bit like Curve. When you provide liquidity, you're providing liquidity and getting exposure onto three different asset type. Like, for example, like a tri crypto, pool on Curve, or perhaps like a multi asset balancer pool. Um, I think one of the interesting things that, and this is like a little bit off topic, and I have a buddy that works over at Charge Protocols, which is this other NFT DeFi protocol that allows you to essentially deposit NFTs inside of an NFT. So you're allowing a essentially a one NFT to be holding a basket of different assets of NFTs together, and therefore represents an index position for a given market. When I was reading the protocol documentation, that kind of reminds me of that a little bit. The one thing that we're over at NFT Perp we're very bullish on is creating indexes around NFT finance and allow users to bet on directions of a given collection. What does that look like in our V2 or perhaps V1.5? I've kind of tinkered the idea of using perhaps like GMX as a base layer model where you have this GLP, and once you enter that position, you get exposure to different weights of inside that pool. So there's a lot of potential opportunities to be captured, and it still requires a ton of mechanisms design. But I feel like the infrastructure is slowly coming together for that to happen. But nonetheless, like, thank you for covering that. I think it was just kind of curious on how the infrastructure index work. Is there anything else that you guys are currently developing that are worth mentioning in the current vaults you guys are creating?
Well, the two vaults that we're building, I think they're by their very nature, they're very much worth mentioning, expanding upon. Though I think we've given already a relatively good rundown at a high level on how they would operate. But the strategy that we have for the protocol is pretty much the following. We launched those two vaults. We got product market fit. We have those integrations with the primitive partners that we like. And later on, what we would like to do is build out the architecture, the knowledge base, and the community for people to come in and start playing around with the base layer of technology, more or less, right? So thinking about how to, let's say, so each of the vaults, so this is kind of like an underlying thesis that we have in the team. There's hundreds of permutations that you can play around with when it comes to fractionalization or LPing or collateralization. And it would be impossible for our team to cognitively and in terms of time to play around and grasp all of those permutations. So what we want to do out of V2, which will be quite some time from now, is find out a way how either directly through our DAB, directly through our front end in a more limited manner, or potentially in a urn-like manner, allow users to use our base layer of technology to create their own vaults, attract capital to them, and effectively manage those vaults as a form of social, let's say, social asset management. That is something that we have been exploring, but at this point in time, we just really want to focus on, getting our products out to mainnet, building out a community, finding the right people who want to, help us build this, and provide value to the users that we want to fall in love with the product.
Yeah, that makes a lot of sense. I think one thing that stood out to me when you guys are mentioning early on is the idea of like sort of like a yield finance model where users can and perhaps like you mentioned early on, as you expand to that, users can create their own strategies and make things a lot easier. I think outside of this, a lot of primitives as slowly coming out as a protocol. If you can be adaptive of the different infrastructure out there, the opportunity is relatively large. Yeah, I think maybe I think there's quite a bit of few listeners out here, and we'd love to take on any live Q&A if we have listeners that want to raise your hand and go ahead and have some live questions. Love to pass on to perhaps Noah, you're one of our co-hosts. If you have any questions for the Insrt Finance team, feel free to ask any questions if you have.
Yeah, happy to answer them.
Yeah, so I was wondering on your sort of aspect of, I mean, first I have to say, like, I really like the idea of being able to having all the different sort of products which are built in NFT finance to have them sort of centralized, or not really centralized, but centralized in a decentralized manner, and then having your guys' users to be able to build directly on top of it or be able to use it immediately without having to, as you said, sort through it. So you're planning to, I guess this is a pretty good question. You're having like a whitelisting sort of method, or will you think you just like be able to harness all kind of data, or will you only allow certain projects on the on your platform, so to say?
That's an amazing question, and that actually touches upon some of the, any builder will face binding constraints, right? And one of the main binding constraints that we're facing in this space is the constraints that arise out of us being a integration-centric protocol. And how we imagine this to work is that we will focus on, at the very start, on a limited number of integrations. And the users who come in and want to develop those strategies and basically manage those vaults, they would have to build that permutation of that fractionalization or LPing or collateralization strategy out of those select number of partnerships, right? So they would be a base layer, and that would be only our base layer. We've chosen this approach because what we are doing on our side in terms of research and R&D is really diving into the specifics of each of how the primitives that we want to work with, how they operate, how their mechanism design works, and how they think about scale, and whether their mechanism design is scalable to a much larger degree, especially in the future. But yeah, ideally, obviously, we would have a lot more of a permeated, like a much more mutable structure in how we would allow users to build strategies on top of Insrt Finance. But we do have to take consideration those binding constraints, and we do have to take into consideration like factors or variables such as security and whether whether we want to partner up with a team in the long term. But Stephen or Puncher, maybe you can pop into this as well. This is something we've been talking about for quite a while now.
I mean, I think you hit the nail on the head in that, as much as we would love to sort of create a free form environment for our users to have free reign across the space, there you need to balance sort of protecting your users while providing them as many options as possible. So in the short term, we're definitely going to be handling the selection process of which primitives we build on pretty tightly, but we do want to provide our users with as much choices as possible down the line.
Now, the decision-making process, I would envision some protocols out there like ourselves. We're doing this sort of core team leading decision-making early on, and while this is happening in parallel, you build some sort of governance function to the token on NFT Purple, or for in you guys' case, Insrt token, to further down the line when you want to work with other protocols, you can go through the governance, function via the community. You can get opinions and voting. Is that something you guys were trying to do long term?
Yeah, definitely. So I think a major pitfall for us might be something we definitely want to avoid is turning our tokenomics or our token as a form of effectively implied customer acquisition cost, and that being effectively the only utility that the token would have. If we once we will launch a token, our token will be focused on effectively incentivizing strategists, methodologists, and allowing them to bootstrap those wallets. Like when it comes to our token, like that will be absolutely the main focus out of all the periphery focuses. However, we're currently trying to find out like what will be the right mechanisms for them, and our team is very strongly against launching a token too early before you have actually established product market fit for the initial products. So once we have product market fit for the first 2, 3, 4 volts, which should take us, I would have to say, about 5, 6 months, that's the point in time where we will have the quantitative data to make an assessment on, we already have a preliminary token economy or tokenomics model in place, something that we've already envisaged. But we just want to get, actual data, actual insights from our community on how we can iterate on that and make it, the right kind of model for everybody who is a stakeholder in Insrt Finance. But to answer the question, TLDR, yes, there will be a token, and yes, it will play a role in incentivizing strategists, methodologists, and provide opportunities for community vault liquidity bootstrapping.
I absolutely love that. The fact that you touched on having at least 4 to 5 vaults that are functioning and you have product market fit, then you launch a token. Because what I've seen on a lot of yield generating strategies, platforms, and it could be lending and borrowing protocols out there. A lot of the liquidity is incentivized by giving out their own token. So in a way that the yield that they're giving out is naturally not native ETH or the underlying protocols that are giving. So yeah, on that point, I absolutely love it because you can actually generate profit for users, and therefore, later on, the token will have a much more impactful role in the ecosystem without any sort of oversupply.
Yeah, exactly. On that note, sorry to cut you off, Floris. I just
No
wanted to
worries.
add that we absolutely don't want to be just another liquidity mining token or just another governance token. Obviously, those are going to be aspects of our token model, but I mean, I just think it's a little counterintuitive for NFT based platforms and protocols to focus so much on fungible tokens. And I think that was sort of the pitfall we saw across while we were building out the infrastructure index product, is that while we really do want to offer our users a lot more exposure to the underlying infrastructure being built out, we definitely don't want to rush into just providing them with arbitrary ERC20s that teams have created just for the sake of it.
No, that makes sense. And the question becomes like, obviously without that, it becomes challenging to bring on user base. So I guess this is a two-part question. What do you think the current challenges are that you foresee? I know you guys haven't launched the protocol live yet. What are the challenges you foresee as a protocol to grow, and the within itself as a protocol? And other than that, like also another question would be around like what do you think is the current challenge in the underlying primitive protocols space, and how do you guys think as a protocol you can kind of help solve out those problems?
I'll tackle the first question, and then I'll either Hentai or Daniel can take on the other one. And actually, to wind back a little bit to what you mentioned with regards to token incentives. So we're actually even the use of native tokens to incentivize user behavior in a specific way. We can actually see that as well in the NFT finance space as well. When you lever against your NFT and some of the protocols, you don't just get, let's say, ETH or stable, you actually get the native token of the protocol. So that actually, the so you are already, by the very nature of that operation or that action locked into the ecosystem of that protocol. And at the same time, I would have to say that it kind of inflates the uh, the utility of the actual uh, borrowing as well, in the sense that a lot of those native tokens, they don't have, let's say, the same amounts of liquidity or the same usability throughout the broader DeFi yield harvesting ecosystem, right? So what we want to do is we want to partner up with primitives who are really trying to solve the issues when it comes to collateralization, to solve the issues of NFT hypothecation or collateralization at a very fundamental level without looking at tricks to boost traction or tricks to boost lending volumes. That is a pretty let's say a big no for us in terms of figuring out the kind of the right partners for us. But when it comes to like the main challenges, there are a lot of challenges that we're currently facing. One challenge that we're not facing right now is the fractional world. Like, for example, the mechanism design is very clearly laid out, and the contracts are going ahead quite smoothly, and the product should be out on a relatively midterm basis. So yeah, we're looking about 2.5 months from now, and that is post audit and post lots of testing, right, to make sure that everything rolls out smoothly. Probably the biggest challenge we're going to face, and that's why I'm talking about partnerships all the time. Uh, the decision space really for us is like the critical component, the crux is making the right kind of bets on the right teams, right? And there are a lot of teams working on the foundational problems of NFT finance. We're not working on the foundational problems of NFT finance. We've deliberately made a decision to not work on those kind of problems and to work on the accessibility and the addressable market size problems of NFT finance. And a major mistake, like what constantly, let's say, is on the back of our mind, is locking ourselves up in a partnership simply because of narrative, or simply because they're currently the cool thing, or they're generating a lot of traction at this point in time for whatever reason. When if you dive into the microstructure or the mechanism design of the protocol, they're actually, let's say, finding shortcuts on how to provide liquidity, right? So for us, like one of the biggest hassles that we're going to be dealing with is really building those long-term relationships, properly doing our due diligence, and being prudent enough to jump on narratives or to jump on protocols that are simply growing for whatever reason it may be, and to truly look at the fundamentals of the primitives that we want to build on top of. Because there's no point in building and spending the time on integrating with a primitive when, if the foundations aren't solid, obviously that protocol will run into growth issues 4 or 5 months down the line, and we'll be facing, I wouldn't call them sunk costs. There wouldn't necessarily be sunk costs, but we would have to effectively find an alternative. But if we are prudent, if we're analytical, if we do our due diligence, and if we really make the right bets, then we'll be able to avoid these kind of problems and, well, provide a much more better experience for our users and a smoother experience for our users without having the need to, let's say, pull products off the shelf just because, one of our primitive partners, made a mistake when it comes to designing how the primitive operates. So that really is, for me personally, that's something I think about every single day. I ask that question for ourselves every single day. What is the best possible partner for us in terms of, fundamentals? And obviously, in a way, you are biased towards the protocols that are generating a lot of traction right now. I mean, I'm not trying to dismiss traction as, a variable that shouldn't be taken into consideration. There's genuine traction. We already see genuine traction with SudoSwap, right? Their traction that's genuine product market fit. And we can see what product market fit is, right? When you don't need to push users to come to your protocol, it's when they actually get pulled in quite naturally. And we're seeing that effect effectively come, like, being like that is already in effect when it comes to SudoSwap as a primitive. Definitely, that is true product market fit. Yet at the same time, if we solely rely on traction as a metric to ascertain what kind of primitives we want to partner up with, I think we're going to have, that's very myopic, and we're going to feel the pain relatively soon, and our users might end up being disappointed with our decision making when it comes to that. Daniel, maybe you have another issue that we're dealing with or a constraint that you might want to extrapolate on.
Sure, yeah. So, I mean, growth is certainly not my forte, as you might be able to tell by my massive 200 user following on Twitter. But in terms of, I think, what we might be doing differently than some of the partner protocols and primitives that we're building on top of is their focus is really on providing the best possible infrastructure, and I would say perhaps power user experience, or even catering sometimes to other protocols themselves, while we're really looking to serve the NFT everyman, for lack of a better word. I mean, majority of the new wallet interactions that are happening on mainnet are happening as NFT interactions, when before they used to be ERC20s. So we're really looking to tap in to the audience that is still maybe not there, let alone even being skeptical about NFT finance. They might not even know it exists. So we're really looking to onboard people through educational material, also perhaps even integrating and reaching the audiences where they currently are, which is like on permission marketplaces themselves. And we really just want to avoid making a product or the way that we approach sort of our audience as only serving, native degens.
I like that. To come back to what you mentioned earlier about choosing the right foundations and right primitives to work with based on team and due diligence, a very, very extreme example of protocols building on top of a very not very solid foundation will be around Luna, Terra Luna. So the entire ecosystem blew up, and billions of dollars and and teams and resources, communities is evaporated because of that. So that's a very extreme example. But what you're doing here is simply protecting your user and protecting your human resources.
Yeah, kind of like in a very like how we kind of see, like, if we make mistakes, if we truly become like the ones who are like, if we build out an amazing accessibility and simplicity layer for NFT finance, and if we establish our position in the market where a significant, let's say, portion of non-native, let's say non-degen native users come to Insrt Finance to access NFT finance returns, and if we make these kind of mistakes, it will have, let's say, an adverse impact on the space in a more broader sense, right? Because less sophisticated users, their losses on simply on a proportionate basis will be a lot more painful for them in comparison to a lot of, let's say, DJs in the space who can take on, let's say, a six-figure loss, and at a later point in time, will be able to brush it off with relative ease, right? Either emotionally or financially. But if we do position ourselves as the simplicity and accessibility layer, and if we scale ourselves, it really is extremely important for us to be empathetic towards, the kind of more broader and less, I wouldn't use the word sophisticated, but less, let's say, native or degen audiences that we want to attract to provide that liquidity for the space. And if we approach them and their funds or their deposits with a completely degen mindset and not think about, the repercussions that it may have on them, and, not think about, how we build out the foundations of our protocol and the kind of partners that we have, that we might end up hurting those people. And that's something that we definitely want to avoid.
Yeah, it makes a lot of sense. I think NFT crowd and DeFi crowd, there is an overlap, and that's probably one of our ideal customers. But the NFT crowd, if we want to make it as simple as possible, they will have to be able to trust you, and establishing trust is not an easy thing in Web3. A lot of multiple touch points need to be involved. A lot of education content need to be involved. So when it comes to building awareness in NFT finance, we're really here wanting to help out in a very collaborative way. If there is anything that we can help to help spur more awareness for Insrt Finance, we'd love to do that as well over at NFT Perp. All right, I think we're coming up to 15 minutes over here. I think if there's no further questions from the audience, we'd love to leave it to the team if you have any leaving notes for this episode. And how do we follow you guys? What's the main? Is there any main events coming up in the next month or two from your side? What do we expect in the nearest roadmap milestones from you guys?
Sure, just follow our Twitter account, and there's two big events. The obvious one is the actual launch of the mainnet deployment of the fractional vault. So that should be done in about 2 months to 2 weeks, 2 months and 2 weeks, right? That's the current basically time horizon that we're looking at. And the other thing we're going to do is that we're going to effectively launch an NFT mint in a month. So what we want to do with that NFT mint is the NFTs that the users will be able to mint on a separate landing page away from our dApp. It will provide users with the ability to access, let's say, forms of utility on our products. For example, lower transaction fees, and later down the line, once we implement our tokenomics, they'll be able to access, let's say, certain, I'd have to say, staking positions on our token model that let's say most users won't be able to access directly, right? So we're thinking about a way how we can incentivize those early users or those early enthusiasts or those true believers in our mission to provide accessible NFT alpha. So feel free to go to our Twitter page, follow us, and we'll be posting updates about our NFT mint. And if you go to our Twitter page and look at our timeline, there's a post there. If you like the post, and if you follow our account, and if you tag 3 friends, we're going to put you, you might get a chance to get on a whitelist spot for one of those NFTs. And if you're interested in following Insrt Finance along in our mission to build these structured products, I think that's a first great opportunity to get engaged with the team. And we really want to, if anybody here wants to talk to us, or just, feel free to DM us. We're going to share our, Telegram handles to you. Let's have a conversation about Insrt Finance. We just want to find cool friends that we vibe with and that potentially we can build together with in the future. We're definitely open to having a conversation with any of the listeners here today.
Love that. All right. Thank you guys for joining for our 3rd episode of Look at My JPEG. And thank you, the team from Insrt Finance, walking us through the problems they're solving and their long-term vision. We're super excited to continue our conversation in future episodes. Follow Insrt Finance on Twitter. And if you haven't, go ahead and like and retweet their post, a tweet about their NFT mint. Thank you guys for coming on. I'll see you next time. Thank you for tuning in to Look at My JPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcasts from, give us a like, a subscribe if you like the content, and we'll see you in the next episode. Cheers.